As we start this week, it's important to have a reminder about risk events generally. I was looking through my records, and last year we had over 30 tradable risk events over the course of the year. However, they didn't all come evenly spread throughout the year, and there were quieter patches when there was one quarter where we just had 6 risk events. Well, we've had a quiet quarter to start this year, with January, February, and March only providing 5 decent tradable risk events. Sometimes that's just the way it goes, and there's a lot of uncertainty at the moment, particularly at the time of making this video. We're sort of heading into the full implications of what Trump's trade tariffs mean, and that can just mean the individual focus on data can alter, and there's natural cycles that central banks go through, which means data is more or less important. So as we approach this week, there are at least 2 good tradable opportunities. There's a potential third one. I'll explain in the video that I'll make a decision nearer the time, so do check on Thursday whether that risk event has been put up. It's the University of Michigan print, and I'll explain why I'm unsure about having it as a tradable risk event. However, there are 2 good risk events for us to look at this week. So I hope you enjoy this video, and I look forward to seeing you live at the risk events as we head into another week. So as we come to this week, there's 2 events that are definitely worth covering and a third potential one at the end of the week. So let's just jump into the detail. The US CPI print on Thursday is obviously important. We know that the Fed are balanced in their approach at the moment, and they want to see inflation definitely heading towards that 2% target, with the headline at 2.8%. It's kind of there or thereabouts. We know the PCE inflation data is their preferred measure, but the market will still react to this as signaling, the right direction or the wrong direction, depending on the print. The February print came in at 2.8%, down from 3% for the start of the year. The core is at 3.1%. Now, it's obviously above the Fed's 2% target. But one thing that I've been noticing is this index here called the Trueflation Index. Now, this index has inflation underneath the Fed's 2% target, just under 1.4% at the time of making this video. And this measurement of price changes is based on 15 million data points, according to the Trueflation website, compared to the traditional index, which is only 80,000 price points. And because it's open source data, it's open to data in real time. There's multiple different data sources, lots of different methodologies for all the categories, and it's billed by the company as a more representative reflection of what inflation actually is. And also it's available, much faster than current measurement tools. And if you look at this here, you can see that there's that sharp drop in the Trueflation Index around the beginning of March, end of February. So that drop goes from like 2.2, 2.4 all the way down to 1.4%. There's a sharp move. So if you just take a look here at February, right, the headline was at 2.8%. So you can see here the Trueflation index. If you had a drop from February at 2.2% down to that sort of 1.4%, then we could be looking for a significant decline if this reflection is accurate and is reflected in traditional data. So I am looking for a sharp drop coming up in inflation based on this information. So we'll have to see, but definitely worth following to see if we get something on Thursday. I'm looking forward to that event. We also got UK GDP data. Now, the base case for the Bank of England is that they will cut interest rates in their May meeting. But of course, what the Bank of England will need to see is one of 2 things, really, to edge them, more definitely towards interest rate cuts. Is 1, they need to see inflation moving significantly lower. It's still too high. Or 2, growth really worryingly dipping. And the latest data out of the Office of Budget Responsibility in the UK had growth slashed in half for this year compared to their report last year. So GDP is in a lot of focus for the pound. And we'll have to see which pairing to go nearer the time, whether the dollar with Trump's tariffs fall out or the euro, similarly for a similar reason. But it's definitely worth looking at for the UK GDP, and it's likely to influence pricing for the Bank of England rate cut that is expected at the moment, the time I'm making this video, for May. A big drop, a big surprise lower below market's minimum expectations could really see that harming the pound on Friday. Now, the other data point is the University of Michigan consumer sentiment data that's due on Friday at 3. Now, I'm torn about this data. And the reason is it was so politically skewed between the Democrats and Republicans. And given the fact that Trump had just taken office, that kind of, post inauguration fallout was very strong in the data. And obviously, as Trump, took his second term, the Republicans are obviously delighted, feeling optimistic, and the Democrats are obviously downcast and feeling pessimistic. So you saw very good data coming out from Republicans, very poor data coming out from Democrats, and it really skewed the data. And that was really shown up in the inflation data as well. Look at this. 1 year inflation, 4.9%. Now that's because Democrats see inflation even higher, 5% plus in some cases, and Republicans saw very little, impact. The neutrals still did see inflation higher, and all of this is about the tariff concerns and what that's going to do to the US economy, and that's going to be turning up in the data. For this print, we should start to see a more measured response, and the reality should be sinking in. So I'm not sure whether to cover this or not because of the vote split. I think it'll depend on nearer the time, and I'll get a sense of how the market is feeling. The 5-year inflation expectations, that's just, that hasn't been that high since early 90s, 1993, 4.1%, really shocking. And of course, just because consumers are expecting inflation this high doesn't mean you're going to get it, but it has been moving markets, and its high inflation expectations, even with the revisions from last month's March's reading, that got another short leg lower in the S&P 500 at the time. So I'm keeping an eye on this, and I'll make a decision nearer the time. However, for now, right, they're the top 3 events for next week: US CPI and UK GDP, the 2 definite events, and there's a possibility of a third with the University of Michigan data. I will have that in the calendar on Thursday evening, right? If it's going to be covered. If it's not there on Thursday evening, it won't be covered. So that's what to look for. Thursday, just have a little look. End of play on Thursday. Is it there? Then I'll be covering it. If not, I won't. And of course, I will be covering the UK GDP print on Friday morning as well. So I can also let you know then. Okay, great. Have a very good week, and I look forward to speaking to you soon. Goodbye.